And we are live for episode 30 of the Blue Crocus Experience. And I'm joined today by Kit Moore out of Ontario, I believe. And he goes by the title of the chief servant at his business. And he'll get into that a little bit more here. But Kit, it's awesome to have you here. Excited to get to know you a bit before we hopped on the mic here. And if you want to just tell the people a little bit about you and your journey in the entrepreneurial world, then we can dive right into it.
Well, thanks so much for having me and making the time. It's been great connecting a little bit about family life, and we can talk a little bit about family as well as business. But in any event, in terms of my journey to where I am, I'm a chartered accountant by profession. So I have a certain amount of technical abilities and business acumen that helps me in my entrepreneurial world. And where BluePrint CPAs has come to has been a process of learning as we go, some rebranding efforts. And really what we currently do is assisting growth-oriented entrepreneurs with growth strategies and their implementation in the small business segment. So we have a diverse team, and that's why I'm the chief servant. There's a lot of learning and growth and obstacles to remove so that I can ensure the team is thriving and engaged in their work. And in a nutshell, what we want to do is we take fairly complex topics like mergers and acquisitions, tax, or growth strategies that are technical, maybe system implementations and web development, and we want to simplify them for entrepreneurs. So we consider ourselves simplifiers of digital innovation in a nutshell.
I love that. Yeah, that's awesome. And I didn't mention this before we got on air actually, but I've had a couple. I had a tax planner out of the States on here, and an accountant as well out of the States. So you're my first Canadian one, which is awesome for me as well because we'll chat after a bit about my business, and the tax stuff. But yeah, no, that's awesome. It's exciting, and there's a lot that needs to be done in the space, and a lot of entrepreneurs when they're starting up, they just have no idea of the blueprint, which is coincidentally the name of your business, but
Yeah, thanks for the plug.
where to go. Yeah, no, and this is a platform for you, and we'll share it out as well. But the things that you had kind of sent over to me to talk about, I really liked, and kind of tie into what you do as well and give you a chance to plug what you're doing. So what the topic of this episode will kind of be focused around is growth and risk and just the entrepreneurial struggle and the rewards that you can reap on the other end. So maybe we'll just dive in talking about growth, how you see it, how you help people implement it, because a lot of people probably come to you unsure of where to start, right? They know they want to get to a goal, but they just don't know how to get there.
Right. So I guess we could just start with some of the themes about growth. I was talking to an entrepreneur yesterday about growth, and one of the things that came up is that a growth mindset and personal growth is so rewarding. And I find with kind of the digital native generation of folks that grew up in the information overload world, that a growth mindset is almost intuitive to them. And I really differentiate between what you'll call personal growth and growth mindset and business growth. And the reason I differentiate is because I find personal growth, if you have a growth mindset, personal growth is rewarding. You know that you can learn, you know that you can improve, and you consistently push yourself to do that and compete against yourself to become better. On business growth, on the other hand, any entrepreneur that's been through it, I don't put it in quite as rosy a light. I'm more sober about business growth, which is that it's excruciating. It's one of the hardest things to manage. And if you don't do it properly, it's got all this risk attached to it. So when we talk about risk today, we can talk about kind of upside risk and downside risk. And a lot of risk, in my opinion, is subjective to who you are as a person and what you're comfortable with in terms of risk. But growth itself, if you want to drive growth, and this is where BluePrint CPAs has found a nice niche, is that you have to have the infrastructure to grow, and you can build it as you grow, which is a risk decision, or you can build it up front, which has a separate set of risks attached to it. But one way or the other, if you're not prepared for business growth, it's virtually unsustainable. I mean, you can just grow and grow and grow and not manage it and not execute and not do a good job. So I really like the emphasis on differentiating between personal growth, which is inherently rewarding, and business growth, which I think is inherently painful.
Yeah, inherently painful, but I mean, on the other end of the scale is eventually we want to be able to, as business owners, I think our goal should be able to step away and let the business run itself, right? And that's a struggle. I'm just reading through this book here, The E-Myth,
Yeah,
and that's, I have some mindset stuff that I need to change and work on, right? So, but I mean, yeah, that's awesome. I like your definition, and I like, because anybody can read a book and go to rah seminars and all of that, right? And grow personally, but when you dive into the entrepreneurial world, it takes on a whole new light, because you got to support your family, you got to support your employees, all of that sort of stuff.
right. Yeah, well, you honed in on this notion that we should all target growth in a situation where we make our business sustainable so that we can have some form of balance and not drown in work. And that is a really big struggle, in my opinion, in terms of what I lived through. The step between being, say, a freelancer and then scaling into a larger team is where I found a lot of the challenges, where once you cross that line, now you have a little bit of a foundation to work with. But that first step, going from I've got enough work to sustain my family and I'm engaged in what I'm doing and it's fun, and then going to the next step, which is kind of leading a team and building out a group that can deliver on a broader service, that's super challenging. And yeah, there's risk through there too. So I think, well, I agree with you. I think most entrepreneurs, if you don't grow, you die kind of mentality. But on the other hand, growth can kill you too. So
Yeah.
it's there's a growth imperative in my mind, but not everyone can get there. I mean, I certainly see small businesses where, they might make their fair income. Let's say they get to $100,000 a year in a simple service business over 5-10 years, they build that and then they sustain that and they stay there. But digital transformation is really complicating that a lot because other competitors are so efficient now. And so the margins are so much higher if you're digitally transformed, that if you don't have an eye towards managing growth, it's really feasible to become irrelevant in this economy, which is a big risk, I think, at a societal level, that people aren't transforming and building the businesses of the future so that they can separate themselves from it and have a platform that doesn't require so much manual involvement on every single task.
100%. Yeah, I'm going to kind of speak to a couple points there. First off, that's exactly where I am, is taking it from me being the only person kind of wearing all the hats, to bringing on team members. And so I think this is a timely talk for me, as well as hopefully for people listening. And then the second point, which you brought up lastly there, was digital transformation. I know we were chatting off air quickly about, what you guys do and how you kind of lay out a blueprint and everything. And, how you work with some construction trades as well as, and, that's kind of my background as well. It's like a lot of people in the trades, they do really good work, but they're really, really behind on their front facing digital, whatever you want to call it, whether it be their website or their Facebook or advertising or whatever. They don't either even have one, or they're just really outdated, and aren't taking good care of it to present a good image, right? It's like, now wearing the suit to a meeting is making sure your digital presence is optimized, right?
Right. Yeah. Personal branding. And well, it sounds to me like when you describe your niche, one of the things we spoke about before we started, so we can provide some context, I guess, for listeners, is that you've really narrowed yourself into a segment, right? So you've gone into contractors, and then you've found yourself a niche in asphalt and in paving.
Yeah.
And I think that nails down so much about what I believe creates value, which is that if you're not niche and you're not differentiated, it's very hard to imagine how a small business can compete, because larger competitors can have more scale and more scope and still have a cost advantage doing that. So it sounds to me like you've done a lot of what we advise on, which is looking at service offerings and understanding, can a business owner scale their service offering digitally? Is it conducive to scaling? And do you have the unit economics right and your business model kind of tuned to a digital transformation. You've addressed a lot of that, and it is a little bit easier to do when you're building an organization than when you're trying to transform an existing organization with a set of norms and employees that do things a certain way. So, exciting times for you. I can predict some of the challenges ahead, and I think that there's ways you can manage them. But that's the journey for entrepreneurs is,
Yeah.
how do you grow and how do you address these financing challenges? And that's where, if you want, as this discussion evolves, I can get into some of the technical accounting and financing aspects that create challenges. But I like to stay above the weeds if we can. But if you think there's value in talking about what are some of the technical issues that arise, we can nip a couple of those off before the end of your podcast as well.
Yeah, no, that sounds good. Um, yeah, no, it, like I've said this to multiple people, it's kind of scary to niche down because you think you're leaving other work on the table, right? But as I've done it, I've already noticed, more reception from my target audience because they know exactly what I'm doing. It's not, oh, I help every single contractor on the face of the planet. It's no, I have a specific client, and I'm working to increase my knowledge in their field and all of that. So I had someone else on here in tree service, and he said when he went from being just a general landscaping tree service person down to just doing specialty tree work, that's when his business exploded. So, we're all kind of saying the same thing here.
Yeah, I think you're addressing one of the challenges that has an upside to it. So at the beginning, I mean, if you looked at how you scoped your business, for example, if you stayed at the construction level, then you could conceivably be taking on electricians, HVAC professionals, concrete and foundations, appraisers, real estate agents, lawyers. I mean, the value chain is so large in construction. And so for sure, when you find a niche, it has a high probability that it'll slow down your initial growth because you're saying no to a lot of clients. But on the other hand, that's where you can look and say, well, what's the quality of your growth? Because now you're growing into a segment that you can properly serve, that you understand, and that your value proposition is really clear to those customers. And so I think that you slow down that initial growth intentionally by scoping out folks that you're not an expert to assist. And then exactly like you described with the tree client, then it's about the brand awareness in your niche. And once that brand awareness is there as to what exactly you do, now you can really scale profitably and by really just helping clients because you understand their domain. So yeah, those are key tenets that we work with in terms of getting the right growth, having your brand. I just think brand is so critical to growth that people can identify your brand as to what needs you fill in the market, what pain points you address.
Yeah.
And those are, I think, foundational to growth, because until you have that stuff locked in, you'll just grow with the wrong clients and the wrong spaces, and then you have a restructuring problem later.
Yeah, no, exactly. And I mean, yeah, like let's talk a bit about one of the points you brought up was the common themes in growth. We talked a bit about that, is niching down, all of that, but maybe you can expand on that a bit from your perspective.
Yeah, sure. So I think, if you look, let's use a generic business and we'll just make one up. But let's say I have a dry cleaning business, right? And I dry clean, people just stop by and they drop off their clothes, and they always want a quick turnaround because you never get your dry cleaning in early enough.
Yeah.
That's a broad strategy in the dry cleaning industry. We'll just take whatever comes in, we turn it around when it comes in. And there's a whole set of challenges that comes with that. It's very difficult to predict the demand. When is the average Joe going to bring his suit? Well, we don't know. And so how do you staff that? Very difficult to do. Whereas if we talked about a niche, what if you were specifically dry cleaning emergency services uniforms? So now you're only dry cleaning police, ambulance, and firefighter suits for their professional decorum. Clearly that's reducing your market size, but it's giving you an ability to control the process, to design workflows around, would you be able to just now identify your customers? Maybe you can pick up the suits or the clothing on an interval, which is a convenience to the client, and you can deliver on committed timelines, and you can predict the amount of dry cleanings that they'll need in a year, so you can change your pricing model, you can change your cost structure. So that's where I think if you went down to say, I think a niche strategy ultimately has better margins and higher customer satisfaction and higher customer retention than being all things to all people. Certainly you can be all things to all people. It's just actually a lot harder to do profitably and find yourself a balance. So I think that example about, niche, you could apply that to any variety of industries. What is your niche, right?
Yeah.
And the other thing I like about it is, let's build on this example about emergency services dry cleaning. If you were in that niche and you wanted to grow it, now you know how to configure your facility so that if you went the next town over, you have a repeatable process. You can get your brand and the name of your business refined so that it's understandable from a user perspective. You have a real neat approach, like what you said in your area, where you're able to do lead gen because you have a niche. You
Yeah.
have a real clear approach to how do you identify new customers, how do you serve them. It's just so much easier to manage, right? You made reference before we started the video about it's so hard to manage when you don't know your space and own it. So that's where I think niche strategies are pretty critical at the front end, and they have some cost benefits to them as well in terms of how you manage your business.
100%. Yeah, I love that. I love that. And I mean, what, like, kind of circling back around to growth and what fuels it, what, from your perspective and what you've seen with people, what do you feel kind of fuels growth or drives growth or makes growth happen or not happen?
I think for me, what fuels growth, the first step in all of it is pretty much either the top leader or the top leadership team, depending on the size of the business and where they're at kind of in their business life cycle. If it's a startup, then usually the founder, co-founder team is the key driver of the vision and where the business is going to go. If you're maybe a mid-cycle business that's getting closer to maturity, your services have been understood for 5 or 10 years, then it's probably the leadership team, not just the top leader. I think that focusing on anything other than the leadership at the outset is missing the point that, you know, the a person wanting to grow and a person being able to manage the growth, this human aspect of growth is so critical.
Mm-hmm.
So when we're working with clients, we do a lot of screening about what is the probability of them actually leading these growth initiatives, whether it's a digital transformation or redesigning their business functions internally. You have to look to the leadership to say, are they capable of it? And then after that, I mean, that's step one, is like, that's major, that's foundational. If you don't have a growth oriented leadership team, I don't think you can grow at all, frankly. But
Yeah.
once you have that and you kind of know your vision and you can see where you're going, then, now you're getting into the iterations of, is your product or service optimized for the market you're in? And so there's a whole lot of, in the startup community, a lot of dialogue and thought leadership around product market fit and service market fit, and learning as you go in order to optimize how your service, I call this, I don't know that I pioneered it, but I call it how you glide through the internet. Because if you're kind of clunky and your market, that like your service doesn't fit great to its user and its audience, then now you're actually paying to push a lot of this brand awareness. Whereas once you achieve the fit, it kind of glides, right? So you
I
can
love
think,
that. Yeah.
yeah. So like if you think about something like Shopify, I mean, how the heck does Shopify become larger than Royal Bank? Well, there's no economic way to do that on a marketing budget. The
Yeah.
way that Shopify did it is that, this is my opinion, and it's far more complicated than I would even understand, but initial impression would be that they've got an extremely good fit in their marketplace, right? So they took the time to develop the top platform for e-commerce,
Mm-hmm.
and then they optimized it as they went. And then all of a sudden there's this catalyst in the pandemic that says everybody's staying home, and they just absolutely explode in
Smashed
terms
it.
of
Yeah.
value and demand, and everybody's looking for an e-commerce storefront, and they were ahead of it. So that's, the key thing that I think Shopify did, not about real specific capabilities because it would be far too complicated for me to understand, but one of the key things that they did, and I believe in this, is they made investments up front. They believed in their marketplace, and they went and developed the platform, which is not inexpensive, and they did it before any of these major catalysts that just made them so enormous. I mean, they were already getting pretty large, but obviously they built a platform. They had the conviction and they had the strategic intent to stay the course in the market they were in, and then they kept investing, because it'd be really easy in a short-term framework to say, we didn't meet a quarterly goal, maybe we have the wrong strategy. But when you're looking out 5 or 10 years to say this is where the market's going, they just kept optimizing and developing and improving. And now presumably they're in like a really good spot where they just get to keep growing, and they're so well resourced now that they can fix problems rapidly and keep hiring the best people. And so they just have such an enormous competitive advantage over, if you or I were to start an e-commerce platform at this point, it raised serious questions about whether or not anyone can even do it.
Yeah, yeah, exactly. Yeah, and I mean, circling that back around for, people in the contracting space, it's like, it's going to cost money to, because a lot of people I talk to, they want results now and then they want to pay later. It's like, well, usually it's the opposite way around. Like you bought equipment, right, at the beginning. You hadn't made a cent and you had to buy all your equipment, right? It's the same way with your driving, whether it be marketing, brand awareness, lead generation, whatever it is, right? There's investments that have to be made up front, and you've got to stick at it for the long haul. No, keep monitoring the ROI and the key performance indicators, but for the most part, you're not going to see an instant return, right?
And that's exactly where you're starting to talk about risk and growth, and how do you even define risk? I mean, if you look to financial institutions and like life insurance companies, they have well developed risk management groups that are staffed by people with PhDs in physics and actuaries, and that's not really the same lens that I look at risk through as a small business owner. It's, I'm not ever going to spend time trying to do a Monte Carlo simulation of my future marketplace.
Yeah.
What I need to understand in terms of risk, and what I really love about where you just headed with this, is that there is a misunderstanding about risk with some entrepreneurs. And that's where I was saying with leadership, either a leader either understands that they have to take risk, or they're not going to be able to properly grow, because there's so few growth opportunities where you don't take any risk. Let's use an example. I cut my teeth in the utility space, and I left it, and it was an amazing organization to work with, full of brilliant people, of fundamentally different skill set than I wanted to develop for my career. But one of the things that I observed in that space was how low the risk tolerance was, because you have a regulated infrastructure company that they basically don't go out and make an investment unless it's fully booked, fully contracted, fully price fixed, because that's the nature of their industry. So there's next to no risk. There are some risks in the industry in terms of uncontrollable factors, but they will not proceed with a project or an investment unless they can predict the performance of that asset out 10, 15, 25 years. Now, and that's not realistic for most growth-oriented entrepreneurs, because there's no promises in unregulated markets. So why am I going on the long version of this? Because one of the things you mentioned was making an investment and seeing the benefits later. Let's break that down into a super simple example. I can go out and hire a seasoned CPA to work in the business, and they've been trained by someone else, and they obviously have more experience in terms of planning out work, executing work, communicating deliverables to client, identifying project risks, and accordingly you're paying a lot more for that resource, so you're expecting faster benefits. But either way, you have to bring them into your business and give them some insight as to how your business works. So there's some investment in training, onboarding, fitting them into the culture, helping them understand how valued they are in terms of their contributions. Now let's take it down to I hire a recent university graduate. Am I realistically going to take someone with little practical experience and expect that they're going to create a profitable turnaround on month one for me? that is the expectation in some professional services, but I don't think it's a great business model where you're setting your junior staff up for defeatism and to be, low morale because it's hard for them to contribute and there's a long development curve. So that's one of the things we try to do differently, is have reasonable expectations to say that I don't believe, and I think this makes it good for our team to work with me, is that I don't believe we can get immediate ROI and immediate turnarounds on much. And that's not the market I'm in, because I think that that's a commodity market. I mean, if I buy a barrel of oil or I buy a tuna, I should be able to sell it pound for pound or liter for liter for a marked up cost. But in private sector, innovative work, you have to build into the market and train people. So that is one of the key things when I'm screening entrepreneurs. Can you grow? Are you an investor, or are you doing this? And this is okay. So let's take it real quickly into like an accounting metric. I will really quickly look at a set of financial statements and say, what's your net income? Doesn't matter to me if it's high or low, because oftentimes in a startup, the margins are lower than they will be in the future. But I want to look and I want to see what's your income and what's your draw. Because if you have an owner that is drawing out the majority of the income of the business, especially in a young business, it's really hard to imagine how you're going to fuel the growth, because the business will consume more resources than you can ever provide to it in
Yeah.
general. Most businesses will. And that's a key thing to keep in mind, is that reinvestment, right? Like if you're not an investor, you just can't get good returns. And so where I see it now with digital transformation is if somebody's willing to spend money on premium branding, premium software, premium services, premium talent to deliver the services, those are major investments, because you might not get a return on those in month one. You're pretty much definitely not going to.
Yeah.
So it becomes a question of risk. How long can you bear, the lower margins, and then you're planning about financing. And so where I mentioned earlier, there's one technical aspect of growth in Canada that's really hard to manage because of our banking system and how we're structured. And it's evolving. I always give credit to bankers. I'm not anti-banker at all, but our market's incomplete on working capital financing. So when we have some challenges ahead of us in the intangible economy, because our lending system is really structured around collateral lending and making mortgages on buildings. And when you look at the digital economy, so much is intangible. So really what you need is great people coming up with a consistent stream of great ideas. And well, that's payroll. Like that's working capital. And typically most lenders aren't showing up with, yeah, no problem. You don't have any hard assets, but you got great ideas. Here's $1 million. Let's just burn through it and see what happens.
Yeah.
So our venture capital segment is thriving and growing. And, where 5-10 years ago, I think you'd hear we had so many challenges in early stage capital for VC. That seems to be evolving pretty well. And seems like Canada's got a handle on trying to move the needle in innovation. But it still remains a huge challenge, because if you want to bootstrap and not bring in outside investors, that I think is the number one challenge that I was alluding to earlier. When you want to go from a freelancer to a structured business with a team and multiple functions, how do you fund all that payroll growth?
Yeah.
And I mean, I've got some answers to that, but I don't know that we even need to cross that bridge today. I think
reach out to Kit after.
Yeah, well, those are key considerations, right? How do you finance the working capital? Let's just give some free advice that I think is helpful. First things first, bootstrap it as long as you can and get the revenue as high as you can, so that when you do go to someone who's looking at funding you, they see a track record, right? I work with a young version of entrepreneurs, especially at universities and whatnot, where they're pre-revenue. And I can't conceive what investors would look at that and want to throw a significant amount of money where there's no track record. So bootstrapping is so important. And that's where you get that entrepreneurial grit. I mean, everything you're doing about finding a niche, building it, working hard while you're growing your family, that is that kind of grit that you actually need to succeed. And if anything comes of the pandemic with startup financing tightening up a little bit, I think it'll be good to revisit this notion that nobody's entitled to 20 or $30 million of financing before a drop of revenue has ever been generated. There's a lot of value in just grinding it out in the tough markets and figuring out your niche and funding it yourself. And then once you see some traction and you really know where you're going, that's when you can actually get, even traditional banks will step in at that point, but you've got to have a track record.
Yep. Yep. I love that. I love that. And that kind of goes into, I mean, we already talked a bit about, risk from an entrepreneurial perspective. What do you think is too much risk? It's a really broad question, but
Yeah, well, I mean, too much risk, exactly. One of the things we haven't done is what is growth and what is risk and how do you define it? I think it's really simple in a business to say that growth is revenue growth. I think that's what most people assume. But I actually don't view for my business. I don't advise every entrepreneur on this, but I don't view revenue growth as my number one growth metric. I view growth in capabilities
mm-hmm.
as our metric, because when we're growing our capabilities, we're making those investments that are the future revenue stream at the right margins. So
Yeah.
I like growth in strategic indicators more than growth in financial indicators. But in terms of risk, I mean, that's a really personal decision, because if you look at, let's say I'm born into an absolute tycoon family, and I've got, distributions coming out of a trust of $5 million a year, there's probably not a lot of risk to tinkering around and inventing things and networking, and I can ride out, indefinitely, no revenue. So it's really, really personal about how much risk someone can take. Obviously, if someone's got a single source of income, they probably can't go 3 years without revenue if they don't have that family situation. But how much, I mean, one risk you don't want to take is consistently under delivering on client expectations. And that's
Well,
a
I like
no,
that. I like that.
yeah, that's a risk, that because you can't have your brand, it's really tough to change your brand. It's a lot of work. And so if your brand becomes consistently under delivering, then I don't think that's a risk worth taking. You really need to focus on execution. And I think that goes back to the bootstrapping discussion.
I love how you flipped that from where my mind was going to just building out a good business, right? It's like you can because a lot of people think of financial risk, right? That's where my head goes. It's like how much financial risk or risk of bankruptcy or whatever it is. That's what pops into people's minds. But how much of your brand identity are you willing to risk? Do you want to like restart it and rebuild from scratch, or yeah, I like that
Right.
a lot.
Yeah, well, one of the definitions of risk that I work with, and again, these are all kind of my own mindset, and I think everyone is wise to get philosophical about their objectives in life and know where they want to go. One thing I've been really clear on for the better part of 2 decades now is that I've wanted to grow personally for a very long period of time. And that, for me, that doesn't really translate a lot into financial. I don't need, given my lifestyle, like, we went through the fact I have 4 children, so I spend a lot of time at home when I'm not working,
Yeah,
and probably more time during the pandemic than I'd like to be spending at home in some cases, because
yeah,
they're getting a little sick of being out of school. But nevertheless, because I know that I really have always wanted to grow professionally. I've always wanted to be one of the most competent people at whatever it is I choose to do. I don't compete a lot against other people, so people on my team are not competing directly with me. I compete very hard against myself. And so one of the key risks for me in my life, and it has driven me sometimes to unhealthy thinking, and I've had to like reevaluate where I'm going with things, but it's still consistently a tenet for me, is the risk of not materializing, right? Like for me, I don't have big financial goals. I'm in a good business line and whatnot, but when I look to the future, I don't say, here's my future financial plan that I need for retirement. I need to get to 1 million or 5 million liquid or all this kind of like financial planning stuff. I don't actually set big financial goals for the future like that. What I look at is, what capabilities do I need to consistently be developing so that I can be excellent at what I do? Because I believe that if I align what I do with the marketplace and I'm excellent at it, then the margins will be there and all that financial stuff kind of comes out of that. So for me, it's certainly driven me in a different way. Some people won't take risk in the sense that they won't leave a large stable employer because they see the risk being, well, maybe I have $100,000 salary, and if I go to self-employment, I'll have zero income. That's a major risk to them. The risk for me is, well, I stay here for 100,000, but I don't achieve any of my personal growth goals about who I want to be as a professional. So I was looking at my future in industry saying, I simply can't accomplish what I want to here. And so there's a ton of risk for me to stay the course at this company. And that same company, nobody views it as risky staying there, right? So it was just my own
Oh,
definition of
that's
risk.
huge. That's huge. That kind of, as you're talking, I'm kind of like, it's kind of putting into words feelings that I've had before, but never really put into words. Because yeah, I love that. Like, what the risk of staying where you are is the unfulfilled dreams, the unfulfilled potential, the people that you can impact, the people you can meet. That's huge. That's a
Yeah, right.
thinker for
Right?
sure.
Like psychological risk, right? Like if you think about an entrepreneur, there's plenty of literature out there, and or even better yet, forget the literature. There's just a lot of consensus that the entrepreneurial journey can be a lonely one, because when you're at the top of an organization, there's not an infinite amount, like there's not a lot of people that can relate to your struggles, and there's not a lot of people that can answer your questions and make your decisions. Sometimes you just have to make the tough decisions on your own, and even your partner or your parents or your closest childhood friends may just not be in a position to advise you, right? So
Yeah.
they might say, well, Lewis, like what you're doing is very risky and I don't think you should do it. But then you've got this different context, which is like, well, if I don't take this leap, I'm never going to be able to scale my service across the Maritimes or into Quebec or whatever it is. So you're
Yep.
just viewing risk differently than them. I mean, there's been points in the last several years, I've done several refinancings where I've implemented growth strategies using some debt facilities. And when I set out, my parents are definitely of the generation where it was like, you should not be borrowing, you should not do this, and you should not do that. And I went, no, actually, the risk of me not using this transformative strategy is that I'm never going to create a sustainable business, which means that there's probably a higher risk of failure to me being inactive than there is to me stepping it up and implementing this bigger program that I'm on.
Well, and personally, you would always know you wanted to do that. And if sometimes you just got to do it and then burn the ships, as they say, and just figure out, build your
Yeah.
parachute on the way down, right?
Yeah, well, that one right there, that is truly like a Reid Hoffman quote, and we'll just kind of name drop his amazing podcast because he's got a few podcasts that are great, but one of them is
I've
Masters.
never heard of him. So,
Yeah, so Reid Hoffman's the founder of LinkedIn,
oh wow,
and
that's awesome.
yeah, how we met, right?
Yeah,
So Reid is yeah, never met him. That'd be great if I did, but obviously I've watched kind of like, because I'm a LinkedIn enthusiast, I've watched his evolution. LinkedIn was sold to Microsoft, so he's on the board of Microsoft. I've listened to his podcast, so you get to know a little bit about his history, but he
yeah,
was instrumental in PayPal growing into what it became, and they had all these great strategies. Well, in any event, Reid Hoffman is a master strategist, no questions asked. If you listen to his podcast, the guy is,
what's it called?
so he's got a couple. One is Masters of Scale. I really like that one.
I've heard of it.
He's got another one, Gray Matter, which I don't know that he owns the Gray Matter podcast per se, but that's a vent through his venture capital firm where he's partners with these other VC investors. But he, exactly what you said, jump off the cliff and build the plane on the way down.
Yeah,
That is just far too risky for so many people. And on the same token, it's why so many people haven't founded Google,
yeah,
right?
yeah,
Because
exactly.
right, Google was in uncharted waters. You couldn't build it. You had to build it as you go. And so
Yeah,
they took a ton of risk to get where they were. And yeah, I think that self-actualization, I mean, one thread I see in growth-oriented entrepreneurs is that this degree for autonomy, which can be an illusion, you're never totally free from, the influence of others, but autonomy and self-actualization and really being able to craft a vision to live into, those are kind of those foundational things about growth is, are you willing to push hard enough and make enough sacrifices to get where you want to go?
I love that. Yeah, and you touched on the lonely entrepreneurial journey. That is literally how this podcast came about. Was I wanted to connect with more people who were much further along than I was, to kind of set my sights a little bit higher and learn and whatnot. So I appreciate that. I appreciate you touching on that. And just to kind of wrap up here, I don't know how much time you have. We probably should have discussed this before. How much time do you have?
No, we can continue this for a couple minutes, but if you've got some closing comments, I'm okay with that too. I do have some stuff I've got to get ready for my vacation tomorrow, so I've got a few files I need to finalize. But depending, if let's just take it as we go. If you got a couple questions, let's make
Perfect.
sure we ask them. But
Perfect. Yeah, I mean, we can kind of wrap up with, we've talked a little bit about it, but the methods to manage risk, whether it be, entrepreneurial, personal, psychological.
yeah, so well, we talked about how financial risk is actually a function of other factors, right? That financial performance is a lag indicator to everything you're actually doing. But that being said, one really good risk control, in my opinion, and I don't think it's a plug for us per se, because lots of people can help with it, but we have our own unique approach to how we do it. Doing a financial forecast and like where you actually have your business model kind of well reasoned, and then having a good quality financial forecast, which is different from like a spreadsheet that just says here's my revenue growing 1% per month.
Yeah.
No, like because a forecast can really be broken down into each and every driver of cost and revenue and investment and financing. Having a really good financial forecast is the beginning, because a financial forecast will allow you to do like an annual budget. And I think that a really good risk control tool is evaluating your actual performance against your expected performance on some consistent framework. It's hard for really small businesses to do that monthly. You may not gather enough data or experience in a month, but quarterly is a good time frame. And when you're smaller and growing, every 6 months, if you don't have the resources, is okay too. But I think quarterly, a lot of stuff should be quarterly, about just looking and saying, where did we think we would get this quarter and where did we get this quarter? Because it's less about looking at the actual financials against the budgeted financials, and it's more about understanding where were we wrong in our assumptions, right? Because the financials are just the quantification of a bunch of assumptions, right? So if we assumed that service one would have growth of 50% in same store offerings, and we only hit 40% while we're coming in under revenue, right? It doesn't matter that revenue is less. You want to understand that you came in under in certain stores.
Yeah.
Why is that? Did we make the wrong assumptions about our target demographic or their purchasing activities? And so that's a financial forecast, a good quality one. And these are much more costly to develop than like most people want a budget because they just want to say they have one.
Yeah.
But like a really good quality analysis that takes your strategy and your vision and your business model and looks into the future, maybe 3 years, and then breaking that down into kind of like your monthly and quarterly targets, that's a super good risk control tool. I think that actively managing your strategy, there's a buzzword that comes out of this. I took the time to go to Silicon Valley last year and get trained in this framework. It's really popular in the tech community, so you'll hear it and you might be familiar with it, but a lot of people aren't, called OKRs, which is objectives and key results. The
Okay.
objectives and key results framework is a relatively simple framework to manage, and it has you managing your operations and your strategy on a quarterly basis. So that's a good risk control framework in the sense that you're ensuring that everybody's kind of trying to be aligned in where the organization is trying to go, and you have a process to monitor it. And so I believe management frameworks, right, are one of
Yeah.
the best ways to control risk. And then other than that, I think for an entrepreneur in small business segments, I think there's a whole lot of risk acceptance. I think someone trying to get too much of a handle on risk um, may just not be able to tolerate the fact that the future is
Risky.
it's basically completely uncertain at all times,
Yeah.
right?
Yeah. If
So
you spend all your time focusing on the risk, you're not going to focus on growth either. I mean, it's a balance, right?
yeah, there were pivot points in my life where I got more comfortable with it, and it helped me change into a professional that could tolerate risk. I don't think you should ever take ridiculous risk, like, go borrow $5 million and get every single person in your family to co-sign for it on basically rolling the dice on a craps table, right? That obviously is ridiculous.
Yeah.
But on the other hand, I had inflection points in my life where risk kind of was accelerated to me. And, like I mentioned, I had a health event about 10 years ago that caused me to rethink my direction. I had changes in employment as a function of being a young parent where I just couldn't deliver on expectations in terms of workload at one place that I worked. So I moved on. When some of those things occurred, I had risk presented to me in a way that I never understood it before. And because it was kind of forced, it was like all of a sudden I just got a lot more comfortable with it.
Yeah, you have no choice, right?
Yeah, and having a major health event was big on that, because that was the first time where I realized like nothing is guaranteed to me, including my own health, and I could just as easily be dead right now. And for some people, I think that a situation like that could disable your ability to function. For me, it did the total opposite. For me, it just made me say, you know what? Every day is uncertain. I want to be happy. I want to still be growing. I can't say that I've like completely improved. You know, I still eat junk food and
Yeah,
probably
yeah.
shouldn't. So
You're
it's
still
not like,
human.
yeah, I can't preach that it, you know, it made me such like a perfect person. It definitely didn't, but it reduced a lot of fear where I just said, holy, like it was never so real to me that you could just die anytime.
Yeah,
And that, and so now I'm like, you know, and well, my family doesn't really like hearing it, but like I'm very comfortable with the concept of death, right? Like it doesn't terrify me as much ever since I had kind of a near death experience.
yeah.
And that was probably pivotal for me, because once my fear levels came down,
Because that's
I
the ultimate risk, right? Really, for all
yeah,
of us.
yeah, exactly. I mean, not living isn't something that most people want to contemplate, and I
Yeah,
certainly want to be alive as long as I can. But coming that close to it was really eye-opening for me, and it had the effect of reducing my fear, because I just said, like, you know, not I can't actually take anything for granted. I have no idea what the future holds, and I'm no longer looking for that kind of certainty. I don't need answers,
yeah,
and that was very freeing for me, but also really uncomfortable even for some people around me and other people that still kind of have some of these shackles of certainty. I call that the illusion of control.
yeah, yeah, yeah. Well, you know, people thinking that a job is a secure thing. I mean, that's how what kind of got me started in this was I did. You know, it kind of propelled me forward. I'd already started this business while I still was at a previous job, but I got laid off, and it basically was like, you know, nothing is secure. I mean, it helped with the sales pitch to my wife as well. It's like, you know,
I,
nothing really is secure, so you've got to do the best you can, right?
Yeah, well, and it seems like you're on that track, because once your mentality, and that's all about a growth mindset, you can more or less do anything. I mean, if you decided today, there are some, like, you know, people have cognitive limitations and whatnot, and we're
That's my
not
biggest one, honestly. Yeah,
well, we're not all born to be, you know, like cardiovascular surgeons. I don't think I have the steadiness of hand to do that job, for example.
yeah.
But if you believe in yourself, you could get yourself pretty close to being able to be a cardiovascular surgeon. So you can push yourself. And
Yeah,
um,
when you said cognitive disabilities, that, you know, my brain trash is what holds me back from most things, to be honest.
right.
You know, if you
Yeah,
can
yeah, exactly.
believe
Mental,
in it and realize that you can figure out a way or surround yourself with the people that can do it, then you're well on your way there.
yeah. So, well, you made reference to, and this is probably a great closing point when we talk
Yeah,
about risk. You talked about how getting laid off made you realize that nothing is that certain. And I went through the same path. Interestingly, when I left the stability of a really large utility, there was a group of people that thought I was nuts, because nobody left those companies. You had full pension, great salary, good work-life balance. I left for my own personal fulfillment reasons. But as it turned out, several years later, there were a series of mergers and acquisitions where people that had spent their whole life kind of hanging out in the safe estuary of the utility all of a sudden were losing their jobs and realizing that they made these assumptions about stability and lack of risk that they were falsehoods. They weren't even the right assumptions. And that's so important for people to understand, I think, that how little certainty there is out there, right? Now, what we talked about growth, when I left the utility, that was the beginning of me really working on my capabilities as an entrepreneur. So all these years later, I avoided the merger, the, you know, what we call the bloodbath of mergers at these big businesses. I wasn't around for that. And I was investing in my capabilities that whole time out of pocket. That's another thing,
yeah,
like spending money to make money, right? And really didn't have the same risk that they did when they got to that point, because I had gone out and invested in all these capabilities, and I had this more resilient skill set where I just knew I would be okay if I kept investing. And so that's probably the key I would summarize here at the end, is that if you want to grow, you cannot take your foot off the gas pedal. You need to keep going. And when it gets stormy, like you have a pandemic, you know, you can watch 60% of society shudder,
yeah,
but there were ways to manage around the pandemic, and I did not take my foot off the gas pedal. Now, that said, I had some good fortune.
yeah,
My industry was not physically locked down quite as much. So there's some, there's some blessings in there, I suppose, if you want to call it that, that I had a good hand dealt to me. But nevertheless, even at that, I didn't lay off budgeting. I increased market spend. I increased hiring. Those could all be conceived as risks, but they also built the foundation for our next level of growth. So
I love that. Well, Kit, this has been really informative and inspiring for me. And I always ask people, what's their one point that you leave with people, and you kind of, I think, summed it up with, if you want to continue growing, don't take your foot off the gas pedal.
yeah, exactly. And just maybe tying that into this buzzword, which is so cliche and so overused right now, but this whole growth mindset, right? Is that if you know you can grow and you know you can improve as a person, forget about your past. Forget about whether or not you were a good reader in grade 3 or you were bottom of the class in math. Irrelevant. Look forward, keep building the skills. Now more than ever, you can learn rapidly and keep your foot on the gas. Push yourself to get where you want to get. And that's different for everybody, right? You don't have to build $1 billion enterprise, but get to where you want to get and be happy with the process.
I can't I can't top that. Awesome. This has been fantastic. How can people find you? Can I drop some links? Can you send some links over and they can find you through the notes?
Yeah, for sure. So, obviously our website, blueprintcpa.ca, that's a good starting point to understand a little bit about the business. Pretty active on LinkedIn if people would like to come and follow our posts or engage with our business. I do try to be one of these folks that, comments back when people are engaging with us. And I mean, I suppose if there's people interested in developing a growth business, then obviously they can track down my contact info through the website, and we'll make time to talk and decide whether or not it's something we can help with.
I love it. Well, guys, don't take your foot off the gas pedal if you want to grow. That's I think that's gonna be the title of the episode.
Awesome. Well, thanks so much for putting this out there, Lewis. You really took the initiative to do this, and I'm grateful that you took the time to speak with me. So
I appreciate you taking the time as well, Kit. We'll just wrap up off air, but it's been a pleasure for me. Thank you very much.
excellent. All right. Well, look forward to talking to you again in the future. Take care.
Sounds good.